There's several key benefits of investing in AREITs as part of a diversified portfolio of assets. The first one is that you get a pretty good yield. Yields have been around 5% for the last few years. We'd expect that to continue for the next couple of years going forward. Earnings growth has been moderate, around 4 to 5%. We are expecting that 4% number to continue again for the next couple of years. You also get good diversification, and the diversification is geographic. You get exposure to several states in Australia and some regional areas as well as metropolitan. And you get diversification by subsector. Several subsectors in the markets are represented within the AREIT market. In terms of quality of property, you get the best quality portfolios in Australia. That's actually improving as time goes on, because with the recent strength in property markets, a lot of the AREIT managers have taken the opportunity to sell some of the what they call the non-core properties that they see as longer term risks, and they sold them into a stronger market, get good prices for them. That means that the residual portfolio is of even higher quality. So you're getting exposed to some of the best properties in Australia. And I guess lastly, it's a very liquid form of holding property. So you can buy and sell the units in property trusts in the stock exchange. So it is easy to change your asset allocation towards AREITs or away from AREITs when you need to. So it's a very liquid form of investment. The obvious benefit of diversifying the portfolio amongst AREITs is that you get to spread the risks. So if you look at it geographically, you'll have exposures to New South Wales, Victoria, Queensland, etc., all the states around the country. And so if, for instance, New South Wales economy is doing really well, properties in New South Wales will outperform. At other times, Victoria may be doing better and picking up the slack if New South Wales has a downturn. So as a very simple example. By subsector, you get exposure to retail, to office, to industrial, and increasingly you're getting other smaller subsectors that you haven't had in past decades. So you're getting now childcare centres, you're getting retirement villages, pubs, caravan parks. So new subsectors are coming to the market in recent years which help with that diversification. The main benefit of the active approach is that we're trying to add excess return over the benchmark, over the index that we are measured against, which is the overall AREIT market. And obviously, by default, we're also trying to add value over passive approaches that try to track that index. This is especially valuable when the forecast for financial market returns are lower, because then the excess returns become more valuable to people. So for instance, in the last few years in the AREIT market, there have been several years of very high overall returns. The excess return may not be as valuable to people when they're getting those double-digit returns, for instance. But as returns come back more to normal levels and into the high single-digit numbers, then the excess return becomes more valuable to investors. Well, we have a value approach to investing in AREITs. So that means that we look for the best relative value in individual stocks versus each other, and we tend to overweight the better value stocks. So that's the first thing. The other thing is, with our style, it often leads us to look for value in smaller cap stocks. Stocks that are under-owned, under-analysed by the market, but with the benefit of our hands-on research, we can find that undiscovered value and add excess return by holding those stocks longer term, and then the market eventually starts to look for value in those smaller caps, and by then we're already set. Well, we have been investing in AREITs for a very long time. We have a well-established process of analysis and research. We have a value approach that's proven itself over time. This has given us the ability to invest in stocks where we have the strongest conviction, and as a result of that, we have been able to deliver excess return over a very long period.